So this is an introduction to Bitcoin. It's a modern form of hard money, right? So it's highlighting the core tenets of time, sovereignty, and fixed supply settings that stage for a critical examination of traditional finance. My name is James Roop, and this is True Hold Crypto. We're just kind of setting the stage for a little bit of thinking. It's important that we highlight certain concepts and principles that preserve our sovereignty. And so let's dive in and sort of... Let's see, still learning, guys. Sorry, wrong button. All right, so Bitcoin, hard money reimagined. Bitcoin redefines the concept of hard money for the digital age, anchoring value in verifiable scarcity and permissionless exchange. So what does that mean? So we're anchoring value. So how are we anchoring the value? So we've created this environment that cannot be debased. There's only so many, right? And so that scarcity allows us to preserve the value, and then it's built on these rails that are permissionless. So it offers a path to reclaim individual sovereignty. When we can transact freely without mediation or controls, we're sovereign. When we can hold and store our value and preserve it and grow it without mediaries or controls, we are sovereign. And so we have to understand that. And it is important because part of being an American is being a sovereign citizen, having control and having rights and having our votes. And so these things do matter in the long run. And so it's really important we start to look at them from a first principles perspective of what we're doing here in America and why we have the systems we have and how we can make sure we take back the controls that we're supposed to have in the first place. So challenging the foundational assumptions of traditional financial systems. All right. So the core thesis is this: money is stored time. Has anybody ever heard time is money, right? And so our labor becomes value, and that value becomes savings, and that savings must preserve our purchasing power, or it's not really savings at all, right? And so when we realize our labor becomes value, what does that mean? Our productive time, our effort that we invest into our work and everything, it gets converted into something our economy can use, a basic form of exchange. And so our effort quantifies that value. And so value becomes savings, meaning this earns value, representing deferred consumption. What is deferred consumption? It means you can do something later at a later date and you've already paid for it. It's stored right there, ready for you to use. Could this be a Disneyland trip for the family? Could this be a car? Could this be a bill that needs to be paid? It's preserved for you to choose. So value becomes savings for when you are ready to do or make that purchase. And savings must preserve purchasing power. And I think that kind of makes sense intuitively, right? Like we don't want to put something away and then have it go bad, not saving at all. For money to function effectively, it must reliably hold its own value over time, protecting your stored labor, right? Because what is the savings anyway? We're saving our efforts from work. And so we want to make sure this whole circle works with no leaks in our value. And so a robust monetary system ensures that time and effort that you invest today is faithfully preserved for your future. So we're trusting faithfully that the system we have will preserve that value. And we have to ask ourselves, does it? I guess that's a really tough question right now. If we're trying to preserve our value, we kind of have to understand what value is in the first place. If you don't understand money, blockchain can be very confusing. And so now that we already understand from previous videos that we live in a world that's run by people, the system is kind of manipulated because people that have power will try to get more. And that's just it. There's no crime here. There's no screaming halt. There's no real thing we can do except for be aware of it. And if we can be aware of it, we can protect ourselves against it. To be aware is really the most important thing. And so what is hard money? So if we have to protect ourselves, then we have to learn what hard money is. Well, first of all, history has proven to us time and time again, hard money is scarce. And so its supply is inherently limited or fixed, preventing arbitrary creation or inflation by any central authority. So we don't want people giving us money and then making their own money, and then they have unlimited money, they can buy whatever they want, and we only have so much. That doesn't make any sense, and it doesn't represent an honest system that shares value exchange. So we want to make sure that its value cannot be diluted at will. right? We don't want somebody just infinitely printing money, or forgeries is what we used to call it in the earlier days. We don't want people forging the money, making fake ones and putting them into circulation and devaluing all of our money. We also need to make sure that it's durable, so it has to be scarce and durable. And this is why gold was so valuable for so long. Gold itself is still great. It just doesn't exist in an economy that protects the essence of what gold is. There's manipulation all around it. And since there's manipulation all around it, it's like it's not even there. So money must be durable. So it must withstand the test of time, resisting physical decay, degradation, or destruction. It maintains its intrinsic qualities over extended periods of time, making it suitable for long-term storage. So durable and scarce, two foundational pillars. I put them right on the top because it is so important that we understand the scarcity aspect and the durability aspect for money to have any kind of real value. It also has to be verifiable. I can't walk over with something you've never seen before or understand and say, hey, this is worth this. You must be able to understand and know the value for you to be able to authentically use it. So its authenticity can be easily and independently confirmed by anyone without reliance on a third party or intermediary. You don't want somebody else saying, oh yes, that's okay, that's right. You want to be able to look and say, I can see that is right. You want that verifiability. Because remember, in this new market, when it's a global market and we're dealing with the world, we can't rely on trust. We must verify. And you're going to hear that all throughout the crypto space. You'll hear all of these neat rules. Don't trust, verify. So anyway, we want to be verifiable. So it's difficult to counterfeit and simple to identify. That's what makes Bitcoin so great. It's difficult to counterfeit and simple to identify. All right, so the last one is resistance to debasement. And if you don't understand money, you might not understand what even debasement means. And so it's really important that you keenly understand it. Otherwise, you may become a victim to it. So it cannot be easily diluted, altered, or manipulated in its fundamental properties or value. So this protection shield from political interference, from hyperinflation and hidden taxation through monetary expansion matters. It matters because if it's resistant to debasement, that means they can't print more and tax our value right from the economic growth. If the economy grows, our value grows. And if we're holding that token that represents the economic growth, we capture all the value privately. And that is a really important concept. All of these pillars point to one's ability to maximize their value-taking potential from economic growth. And that is important to understand. All right, so hard money, ching, we got it. Let's move to gold held the throne for so long. Why did gold hold the throne for so long? Thousands of years. The store of value, of preference. It was tangible, scarcity. Like you couldn't make this stuff and you couldn't fake it. There was no central issuer. It was made by nature, right? By God, you have to collapse a star. The pressure and heat from a collapsing star produces gold. We can't even make it today yet. But for millennia, gold served as an unparalleled standard for hard money, embodying scarcity and independence in its physical form before the advent of digital currencies. And we have to understand that we are evolving as a society. We don't use horse and buggy anymore, hence no furriers, the guys that used to shoe the horses. And we don't do a lot of things that we used to do. And right now we're starting to get rid of limited rocks and have much more sophisticated encrypted accounting systems, global systems. Imagine a global wrapper around the entire planet, but it's not built by any company or government. It's stood up by the people, by the computers in their home that run it and validate it and verify it. And it is the people's money system. That's what we're looking at now. An evolution from gold, where we could trust that nature made it and couldn't forge it, to now a new system where, well, we know that they hold all the gold, but all the markets around it, the pump and dump, the papers that represent gold, all of these things are so highly manipulated. Unless you're holding gold in your very hand, it just feels like you're not capturing that value anymore. And so we have to be very careful that the rails as well as the asset must be sovereign for it to matter, okay? And so this is important because Bitcoin's rails are sovereign as well. So gold's limitations in our modern commerce. So we have to understand right now, it just doesn't make sense to have this rock in our hand while we move through the world. Our world is digital. It's very lightweight. It's very fast, and we need accurate accounting. And so the physical settlement challenges of gold make it kind of obsolete if you want to really be sovereign. Obviously, we can use a certificate that represents gold, but that's somebody else holding it. And now we're doing the borrow game and trust game again, and we're moving away from that. So in order to be sovereign with gold, you physically have to hold it. And so now you have custodial storage issues, you have intermediary dependencies for price, and you have physical settlement challenges again. And so if we're going to try to re-implement gold in a real way, it just doesn't work. And that's important to recognize. And it's also important to understand that because gold is a really sovereign asset, they built a market around it, and the market is soft. And so that can actually play with the value. And so when narrative shifts, markets react, right? And so this is what just happened with the precious metals volatility that we just saw in gold, silver, and copper. Recent sharp price swings in gold and silver demonstrated how quickly long-held stability can be eroded when market sentiment shifts. Positioning and liquidity and influence. These are the things that trigger this, right? But do we have it? No, we don't. Positioning and liquidity and influence. All of these things are affected. So we have the aggregated investor positioning. So these guys are bots, agents, large corporations, and they're smart and they know what they're doing and they run by the numbers and they have privileged positions and high-speed trading. And so these guys combine that with market liquidity conditions can amplify price movements, especially when large players de-risk and rebalance portfolios all the time when they are in the know. But if you're not in the know and you can't push and pull all that money, then basically you just become a victim of their movements while they capture liquidity from the market. So futures markets leverage also. Margin trading and futures markets significantly magnifies both gains and losses, leading to intensified cascading effects during narrative shifts. And so we don't want our value peeled into these markets, because if it does, it gets gamified and played with. And so we really just want to leave these narratives where they are in the markets that they have and start to use something different when we're talking about peer-to-peer value between one another and even businesses. There's no reason right now that an individual could not build a blockchain wallet, store value in it, and then when they go to a store say, hey, would you mind taking Bitcoin for this? And shaving off a little Bitcoin and getting that business owner to privately want to take that asset. It is a human right to use this ecosystem, and we do not have to be subjected to volatility, positioning, liquidity, influence, and leveraging that destroys our value through pump and dump schemes and debasement. And value gets extracted through these mechanisms. Make no mistake, these mechanisms don't just rise and drop the price. They fear people out to sell at losses. They capture value at the top that they create, and then they peel back their assets to cause a dump while they capture more value on the way down when they bet against you, which causes the market to drop drastically harder than natural. And so you have to understand there are tons of ways that value gets extracted. Policy risks, governments and central bank decisions such as inflationary targets or capital controls can directly devalue savings and restrict financial freedoms, eroding purchasing power over time. So we have to understand government and banks are directly correlated with the destruction of our value so that they can get some and use it for other means. We did not sign up for this. Our government is supposed to ask permission, they're supposed to serve us, and we are supposed to fund them. They're not supposed to fund themselves. They're not supposed to take the money behind our backs, and they're certainly not supposed to use it in ways that we don't agree with. And I think that's happened diffusely throughout the system currently. Custody risks. Reliance on third-party custodians, banks, brokers, introduces counterparty risk. So now there's a third party, a business, an individual, an entity, a company that is in between you and your money. They have your assets. That was fine in a growing economy, but it's not a wise decision to make when we start to see an economy struggle, because that's when value starts getting captured to preserve individuals. And we've seen this in countries that have collapsed through the debasement of their currencies, like Greece, when their accounts were half empty, or in Iran. Right now they're going through a currency collapse, and all the others in between, because every time the Americas prints the dollars under the Bretton Woods Agreement, other countries face a more drastic and dire decline, especially since they're printing as well. They're printing and then we're printing underneath them, and it's an exponential drop. And so you have to understand these things matter. Fixed supply matters, right? So we have those custody risks, we have the policy risks, those are the two most important, but we also have platform risks. Are you safe on a platform? Centralized financial platforms and intermediaries charge fees. They control access, and you can suffer from technical failures, data breaches, and operational decisions that negatively impact the user. Well, what's an operational decision that negatively impacts the user? Well, Coinbase front running all of its users for a while until they got caught was a big deal. Those guys actually were betting ahead of you, taking your money and causing you to lose as a business model until they got stopped. So this would be a centralized financial platform taking advantage of its users with the knowledge. That's terrible. It's bad business. So that's a platform risk. And so this is why self-custody is also very important. We don't want to deal with these platforms. Let's trade directly peer-to-peer, human to human, person to person, no borders, worldwide. Market structure leakage also. Opaque market structures, high frequency trading, and privileged access for certain participants can create systemic inefficiencies that allow value to be siphoned away from retail investors and the broader economy. Imagine this in a global network where we have coins that are issued by banks. They tempt us in with interest, but on the back end, they're printing more and they're actually stealing the value from behind us because there's no cap supply. So we have to understand we cannot allow for mechanisms that will siphon our money because they will be used if they are available. The world is run by people, not necessarily good people, right? And so we have to keep that in mind and protect ourselves. It's just that simple. All right. And so the private sector cannot run money. Well, this is an interesting thought. Why? Why do they not want people to control their own money? The government itself has always and supposed to have remained a servant to the people. And so any institution, business, company, or bank that is speaking in this way should not. They should be turning over power to the people. And in fact, they should be promoting private sector self-custody because that is what empowers economies. That's what empowers people. And so if people are supposed to support the government and not vice versa, if we're hearing comments like this and hearing statements like this, a red flag should go up.
It will develop, and I think develop for the better. That said, there are threats. And as I am a central banker, let me insist a bit on at least I gave a speech 2 weeks ago with a triangle of threats and a triangle of answer, but let me sum up. The first threat is privatization of money.
It affects them. And actually, I don't want them to have debasement control, and I don't want them to be able to inflate away our money. That doesn't seem like some power that I want to give. I think I want to have that power and issue it by the people when the people decide, right? Central bank monetary authority. Central banks face a diminished role in managing money supply, setting interest rates, and directing economic policy. Policy to be in my benefit, not theirs. And I don't want them to manage the money supply. Managing the money supply takes away value from me. If they add more in, for example, a COVID event where they printed double, look at everything and how expensive it got. What are we going to do if we see these things occurring? Are we going to still play this game? Traditional banks and payment processors may see their fee-generated services and essential intermediary roles become obsolete. Large financial intermediaries. What is a financial intermediary? So anybody in between a bank and you. They all may become obsolete because automation, artificial intelligence, and blockchain remove the need for those certain institutions that were established. If we have blockchain smart contracts that lock everything in automatically with no third party, and everybody can review it, and each side is in complete control of their assets until they lock everything in, then all of a sudden the concept idea of this type of business is like a VCR, and the DVD just came out, and pretty soon you're handed your hat and you're out of the game. And so large financial intermediaries, traditional banks, and payment processors, they're gonna see their game disappear, at least for profit. They might have to move it in some other direction, but they're not gonna be able to make money off of it because the competition will be too high. And then systems built on monetary control. The entire edifice of state and corporate power that relies on central monetary control is fundamentally changed by a permissionless network. All of a sudden, the people choose and the government acts. instead of the other way around. Why the system resists? Well, control requires custody. Inflation as a policy tool. Okay, so deliberately debasing currency to manage economic activity, reduce debt burdens, and stimulate spending, making savings challenging by eroding purchasing power. Surveillance transactions. Monitoring financial flows to track individuals and organizations' spending, enabling governmental regulation, taxation, and comprehensive controls over economic behavior. Capital restrictions. Imposing limits on what the movement of money across borders or between accounts, preventing assets flight from maintaining domestic fiscal stability and control over monetary policy. And then permissioned access, requiring authorization for financial activities, creating barriers to entry for individuals and businesses. This one's big, barriers to entry. We cannot build systems that class or barrier people. And if we want to create and keep a free society, this is one of the first things to go, is creating these exclusionary markets or these exclusionary groups, and that creates this imbalance of power. We must allow all to participate, and it is to the benefit of humanity because there's value in all of us. So excluding any of us harms us. Anyway, and this ensures compliance with central authority rules and regulations. So we don't want permissioned access. It's so important. We really do want to have globally open, people-supported systems like Bitcoin, like Cardano, that have fixed supply and utility. As we know, hard money has to have a fixed supply, guys. So please wake up. Know the world is run by people, not by good people. And the second largest blockchain in the world might be the biggest attack on Bitcoin. Consider that. Anyway, enter Bitcoin, an opt-in out network, fixed supply, 21 million units. Unlike fiat currency, Bitcoin has a hard cap supply of 21 million, eliminating inflationary monetary policy and preserving scarcity. Right now, interest rates are dropping. Right now, home prices are rising, and our economy is kind of going topsy-turvy. We have to consider, if we look back at history, when we see these metrics and others, threats of war, other things, civil unrest, things like that, we know that there is going to be some sort of scarcity run. Individuals will start to migrate to assets that are rare and scarce. This is how you preserve value. And I imagine many people might be running for something that has an unlimited supply without even knowing it and get crushed. And I don't want to see that. Decentralized, no issuer. Bitcoin operates without a central authority, government, or bank, making it resistant to censorship and single points of failure. Self-custody empowered. Users can hold their own private keys, removing reliance on third-party custodians and reclaiming full ownership of their assets. And permissionless settlement. Transactions can be sent, received by anyone, anywhere, at any time, without the need for approval from an intermediary. Bitcoin emerges as a fundamentally new monetary paradigm, offering an elegant escape from control and limitations of traditional finance through its innovative design. Money made by the people, supported by the people, for the people. Once again, I cannot hound this enough because people are confused. They do not seem to get it through their head. Fixed supply matters. Fixed supply changes everything in finance. 21 million Bitcoin supply cap is an immutable rule embedded in the protocol, fundamentally distinguishing it from every fiat currency and every other crypto that doesn't have a fixed supply. Its hard limit creates absolute scarcity, reestablishing sound monetary principles, resistant to political manipulation and inflationary policies. This is it, guys. This is real. 21 million, and we have to understand we must gravitate towards scarcity if we want to preserve our value. This is throughout history. This is human behavior, and it will not change. Humans will always go to protect themselves. And if you want to protect yourself, stop listening to people on the internet. Stop listening to me. Stop listening to the guys on YouTube and in finance, and you actually look at Bitcoin, and you actually look at the others, and you try to figure out which ones will better preserve your value based off of historical rules. I'm hoping that I just point you in a direction, but I would love for you to explore and learn yourself. There's nothing more empowered than an individual that knows and then just hear it from somebody. So remember that. Self-custody, not your keys, not your crypto, not your keys, not your coins, right? Control private keys, directly manage your Bitcoin, asserting full and verifiable ownership. So we're gonna create our own individual blockchain wallets. We're not gonna download them. We're gonna make sure that they're unique. We're gonna add in our own entropy. We're gonna design in our own randomness that nobody can copy or has any baseline to that can later on be hacked or reverse engineered. We're gonna make sure that that wallet has hard backups, crypto steals, and we're going to make sure that it's on a device that allows us to sign offline. That can be a laptop that never sees the internet. That could be a handmade microcomputer that signs your transactions privately. I really wouldn't trust other third-party devices. I keep hearing more and more about devices being compromised or injected software that could compromise your keys. And you know what? You don't have to in this arena. You can just build your own. And that's what my boot camps teach people. So if you ever want to do a boot camp with me and go to the Bitcoin Core Standard and look at the code and muddle through it and learn how to build your own private wallet, which really isn't that hard. It's not. Sit with me in my boot camp. I would love to help you guys out. Anyway, so responsibility increases. You become the sole guardian of your digital wealth and its security. Why? Because you have to. In a world with debasement and people with less morals every day, with the ability and power to crush us and continually doing so all the time. If we don't make a move like this, at least in part, by percentage in our portfolio, maybe not 100%, maybe we just do 10% just to feel it for a while. That move alone will teach you how this works and it'll improve your life, I promise you, because this cannot be messed with. Self-custody transforms ownership from delegated trust to absolute sovereignty, demanding vigilance, but granting unparalleled freedom. This is really great to know that we have hope. We have the ability. The people did speak. They did create something that we can use as a people. Trade-offs. Freedoms comes with responsibility. This is the famous Spider-Man quote, right? With great power comes great responsibility. With holding our life in our own hands, we have the responsibility for that life. Because if our time represents our money and our time represents our lifespan, then we have to understand we are quite literally taking care of our life and we must do it properly to be safe. And so navigating price volatility, the path to monetary freedom includes accepting Bitcoin's inherent price swings. We have to understand there's bad people out there and they're going to pump and dump this market, but they cannot debase and they cannot claim it. And that is important. All we have to do is be patient, and they're going to pump it and dump it. Okay, fine. We sell it when it's high, and when it's low, we buy. And we start learning how these work, because as long as they cannot strike it from us, take it from us, and as long as they cannot strip the value underneath us, this is the best mechanism to store your value, bar none, even better than gold. Because gold, now we know, since it's not open, public, and globally distributed, it's colluded in a vault with people, and everything around that wrapper gets corrupted over time. We have to realize that Bitcoin being open, public, transparent, and globally supported is different, and in fact better for our needs. So if we're going to navigate the price volatility, because we understand that people are bad and they're going to pump the market until it gets large enough to where they can't affect it anymore, which is growing pains, but it's growth for us. The absence of bailouts. Unlike legacy financial systems, Bitcoin offers no institutional safety nets. This means individuals bear full responsibility for their assets, free from third-party interventions, but you're not free of risk if you do not set everything up properly. Now, we have to ask ourselves, is it worth it to do this? Like, I don't want to lose everything, but you have to understand right now your chances of losing everything are much higher in the current state that you're in than diversifying into a market that emerged out of a need because there was so much corruption. Mastering self-custody security becomes the next concern. Owning your own Bitcoin means owning your security. Learning about private keys, seed phrases, and robust storage solutions is critical but empowering, and it's a big responsibility for all of us. And so we have to understand mastering self-custody and the real rules of how it works matters. This isn't about downloading a wallet or opening up a Kraken or a Gemini or a crypto.com or a Coinbase account. This is really about going to the blockchain and generating a wallet privately that no human on the planet is even aware of, and then putting your value there and storing it privately, and then making sure you have enough backups stored in secret locations and coded up in a way that only you know, that you could get access to that money again. This is the real world we live in now. This is the world of deep fakes, AI, constant hacks. We need to do things like this to get away from what is coming, and it's coming. I have 17 agent swarm that I run, and these guys are constantly working. And if somebody was bad and they put them to work doing bad things, they'd be doing bad things 24/7. And I only imagine that's just a matter of time. So the continuous learning curve, understanding that true sovereignty demands ongoing engagement, staying informed about best practices, network developments, and the potential attack vectors is essential for secure preparation. We want to know if we've ever exposed our seed phrase, exposed a password. We want to understand the risks when we're using these wallets and how to use them so we don't expose ourselves while we're doing it. So many people will type in their password while they're using their wallet. They're exposed now. If you're not offline signing and that thing has any kind of value in it, eventually you might get hacked. I'm just saying, because if there's AI out there and it's running and it can run this algorithm, eventually it's going to look and sniff and find some stuff and it'll get enough and it'll hack it. And so we recommend only signing transactions offline. Now, that doesn't mean that we can't have a wallet with just some fun stuff in it and use it with a simple password. That's reality. But if we're ever going to store our wealth in a vault, there are certain precautions that we're going to take, and we want to be very serious about them. We want to treat ourselves like a bank. All right. So, and this is where Cardano fits in, because we've been talking about Bitcoin and sovereignty all the time, and there's all these other blockchains out there. And I've been in the space for about 10 years now, and I've ripped apart and looked at the code on many blockchains. And I have found that when you go back to first principles, unfortunately, there's not that many. There's really only a couple, aside from some Bitcoin clones that could have utility later on, but they never were intended for anything real. Cardano was. Cardano is a very unique creature in the blockchain space. Of course, it gets no love because if money freedom is a threat to the current system, then the current system will never even acknowledge it. And so if you ask yourself, do you want money freedom? What do you want to do what the system's doing? Cardano is a fixed supply asset. It has some of the best security in the blockchain space, period. It's actually a level higher than Bitcoin. It's an evolving chain. It can hit new technology, evolve it, and continue the chain forward without splitting. It has a hard fork combinator is what that's called. And so when you start to consider technology that can evolve, self-fund, allows for all freedoms, allows you to yield privately with no locks, and you don't have to send it to anybody, and it's quiet and nobody's talking about it. Nobody's marketing it. Nobody's pushing it. Why is nobody pushing money that is free and grows for you? Well, that's easy. There's no money to make off of you when you put it in Cardano. You should think about that. Where Cardano fits: governance and a voice. Community participation. Cardano's model actively involves its community in shaping the protocol. So this evolution through transparent and inclusive processes ensures a broader alignment with adoption. Cardano will move slow. It will move at the pulse and the heartbeat of the people. And as more and more people start to use it and start to experience it, they will never leave. Why will they never leave? Because regardless of what everybody says, once you've used it, you realize I have complete control of my money. This is very lightweight and fast and secure. More secure than Bitcoin. Bitcoin will have to get hacked before Cardano because it has a layer above Bitcoin's security model. It's written in the same code as Bitcoin, by the way, right? The computer language, the UTXO standard, the unspent transaction output, the format for it is the same. So when you consider integrability, sovereignty, what Bitcoin represents with its fixed supply and self-custody, and what Cardano represents with its fixed supply and self-custody and yield and utility, we can start to see a synergy with how these can work together. They even have an on-chain governance program. With systems like Project Catalyst, Cardano implements a direct democratic approach where ADA holders vote on proposals and allocate treasury funds for development and growth. The people are building Cardano. The people are choosing where the money goes. The people are in control in Cardano. This is a big thing to understand. Value can be locked in Bitcoin, and Cardano can leverage that value on their free network, and they can start to peer-to-peer transact. No front running on Cardano, sorry. And when you yield, like staking, you're not turning it over for any amount of time, and you're certainly not locking it. And by the way, you're getting paid every 5 days with your rewards. And they compound. So your rewards are growing with your money. These things are unknowns in the world of blockchain. Everywhere else in the world, yeah, you can lock it down, you can put it in cold storage, but it might be in a contract that you can't get access to. And it might not be in cold storage. It might be in another third-party wallet under lock because you really want that high interest rate return, right? All of these are mechanisms of temptation and control for greed. So it's really important to understand the differences and really do the math on what benefits you. And like I said, we're always going back to our first principles perspective. What is best for the human? What is best for this individual right here? And sincerely, I would like all of you out there who are watching this video to ask yourself that. What is better for you? Is it better for you to be sovereign and to have access to your money and to grow with economic growth and not have it stripped? Or is it better for you to turn over control and let them strip your value and maybe make your life a little bit more difficult than it already is? Like I said, money isn't everything, but in this day and age, it's very important, and it certainly is your voice in this world now. Maybe it wasn't 100 years ago, but money matters now. And so if it does, we have to take it a little more seriously. Decentralized validation. The Ouroboros proof of stake protocol ensures that block production and transaction validation are distributed among numerous stake pools, enhancing security and censorship resistance. So the way Cardano works is not by some sort of competition or energy suck and where the fastest CPUs win. It's actually a round robin, and every single person on the network that's validated gets their shot to mint. And so once again, we see a fairer system employed where there's even distribution on, especially when we're talking about our life, our lifespan, our time, our savings, our money. Remember, they are the same. Don't be disillusioned, right? Become so absolutely free that your very existence is an act of rebellion. The sad thing is if simply moving my money into a private location is an act of rebellion, that alone means something is wrong in the system, I think. What do you hold true? This is where True Hold Crypto comes in. We want to teach you how to look at Bitcoin and understand the principles and the technology and the economic implications of what Bitcoin is doing. And when we have knowledge of the first steps towards true sovereignty, it starts to become easier to understand. And so we want to learn, invest time in understanding Bitcoin's principles, technology, economic implications. Knowledge is the first step towards true sovereignty. We also want to hold, right? We want to acquire Bitcoin and become a direct participant in the new monetary future. The move is beyond speculation to thoughtful allocation. We want to get into it and stop looking at it. The fear must stop and we must start to act. Verify. Engage with an open source nature of Bitcoin. Understand that its transparency allows for independent validation rather than blind trust. So because we can all look at a transaction and say, yeah, that's true, so we don't have to trust, we can verify. And that is important in this new world. And then of course, the crux of all of it, the very thing that matters the most, self-custody responsibility. Master the art of securing your own private keys. Embrace the profound freedom and critical responsibility of owning your own wealth, because that is where wealth lives. It doesn't live where somebody can take it from you. Your commitment to these tenets defines your personal stake in a truly decentralized and sovereign financial paradigm that is here now. We must really try to understand this and look at it seriously from a human, me, individual perspective, and not from this group perspective, because it's not serving us. You, the individual, you're not doing well. You're not thriving. You're not succeeding. And so stop thinking with the group and start looking at yourself and say, what can I do to make my life better? I did this and my life changed dramatically. And that is why I'm sharing this information to all of you as well. So Bitcoin redefines hard money for the digital era, empowering individuals with a finite and verifiable and secure form of wealth. This is an invitation to embrace financial sovereignty through education, responsible self-custody, and engage with a truly open monetary system. So my name is James Roop, and I am the CEO and owner of True Hold Crypto. And what I do is I have an educational course where I teach individuals how to self-custody their blockchain assets. Now, we are not chain agnostic here. We do promote Bitcoin and Cardano because of their first principle support pillars, but the information that we teach is universal to all blockchains. The security and fundamentals we teach are true to all blockchains. And so if you're interested, please head over to the website, check it out, book a consult with me, and you can also go to Tech Alley. I have about 30 videos there. I've been teaching this for a long time. You can see me there, or you can even head over to our YouTube channel, and I've got some links here at the bottom, and you can check out our YouTube, and I'm releasing videos. In fact, this video is on there now. That's probably how you found me. But please check it out and book a consult today. I'd love to do a boot camp with you. You guys can get as many friends together as you want, and we're going to sit down. We're going to have a great time. We're going to talk about monetary theory. We're going to talk about fixed supply assets, the history of money, and once we're done, you're going to actually be able to build wallets in a play area where there's fake money, but everything looks the same. And I'll teach you guys the rules of blockchain and how it works so you can enter this space wiser and more prepared and ready for this new era of finance that's coming. Good luck to you guys. My name is James Roop, and this is True Hold Crypto.